You mentioned gold, and can you briefly explain to our audience your position on gold and why you don't think that gold is necessarily a hedge against inflation and that it can do well during a period of deflation?
Well, gold historically has not been a hedge against inflation. Gold has been a hedge against hyperinflation, which is a complete loss of faith in currency. Gold has also done well in periods of deflation. The gold certainly did phenomenally well during the Great Depression. I believe that gold is money, and money in the senior currency does well in deflations. Gold money in normal periods of normal inflation does not do well. And for proof of that, one just needs to look at the period from 1980 to 2000. Gold fell from $850 down to $250 in that time frame. Anyone that invested in gold and with inflation every step of the way. So anyone that believed that gold was a hedge of inflation certainly got their ass kicked in that 20-year period. Now, what's gold responding to now? I think gold is responding to the credit stress. Gold is responding to the fact that all this debt is out there that cannot be paid back. Well, if debt is out there that can't be paid back and defaulted on, what is that? That's deflation in my book. So shouldn't the value of gold rise in deflation? I'm one of the very few deflationists that predicted that. Prechter certainly got that wrong.
Yeah, that's true.
So, when you look at things in terms of models of money and credit, instead of just looking at things in terms of money, which is where Schiff and Williams go wrong, that's why they're going to make huge mistakes like they made. Peter Schiff advised people to borrow money against their houses and buy foreign equities. So not only did they get hammered on their house, they got hammered on the loan, they got hammered on the foreign equities they bought. This is the problem with the hyperinflationist model. At some point, could there conceivably be a loss of faith in the U.S. currency? Sure. Things can happen. The question is, how likely is that? How likely is that to happen in the United States first versus someplace like, Japan, Great Britain, countries like that? So, those are the things we look at, and people are just too U.S.-centric in their focus on the problems of the world. Everyone knows and understands the problems in the United States. Few see the property bubble in Australia, a property bubble in Canada, the world's biggest property bubble in China, all the malinvestment that goes on to China. China is building complete entire cities where no one is living. And people look at this and say, my God, look at the soaring price of commodities. That's inflation, and because of the dollar. It's not inflation because of the dollar. It's because of inflation in China, because of all the malinvestments in China. So the hyperinflationists and inflationists have really missed the boat here on where this is coming from. This is not a defense of the Fed's policies. I think the Fed's policies are inane. I think we need to write off the debt, not prolong the agony, which is all the Fed is doing. It's prolonging the misery. We're attempting to prop up home prices when the solution is to let home prices fall to the point where there's genuine demand for those prices at that. But Bernanke is hell-bent on preventing these price declines that are actually necessary to this state where genuine demand comes back in. And when genuine demand comes back in, then along with that, there will be genuine demand for services. People will want to buy the houses. They'll want to fix them up. That will steer the economy. So Greenspan is prolonging this effort by the Fed's monetary policies. But that doesn't mean that those same policies are going to cause severe inflation or certainly hyperinflation.
All right. So, given what you just said, I want to talk about quantitative easing and QE2 and PIMCO, which recently came out and said that they had cut their bond holdings, their U.S. Treasuries, to zero. What is your opinion on that? What is your opinion on the effectiveness of QE2, QE1, and all the Fed money printing that we've seen, and what effect it will have if they either A, continue that, or B, discontinue it? What effect will it have on the bond market?
What was the goal of QE2? Do we even know here? Bernanke's certainly taken all of the credit for what QE2 has done. He's actually specifically mentioned the stock market. However, if you listen to, their purpose of the stated purpose of QE2, which was to get banks to start lending, credit is still contracting. It was to spur job creation. Boom, that didn't happen either. It was to stabilize housing. That didn't happen. Home prices are still declining. New home sales and home starts are at all-time record lows. We made new lows on both of those. So in terms of the Fed's stated position as to what QE2 would do, the policy was a miserable failure. Yet Bernanke is taking credit for it here now. He's taking credit for the fact that the stock market has risen. He's taking, credit for the fact that the unemployment rate declined from 9.8% to 8.9%. However, that decline in the unemployment rate was a mirage because we've actually lost jobs in the last year. It's a mirage because the unemployment rate declined because over 2 million people dropped out of the workforce. The workforce is actually smaller. Employment is actually lower than it was a year ago. So, Bernanke is taking credit for the lower unemployment rate. He's not, but actual employment is lower. So, by those measures, the policies were a complete failure. However, to someone who's got a big stock market portfolio, the policies were a success. Bernanke reflated financial assets to the point where they're back in a bubble. Of course, the Fed, doesn't see that they're back in a bubble, but we can look at commodities. I believe commodities are in a bubble. John Hussman has said essentially the same thing. And we've also got the bubble. That commodities bubble is spurred by irresponsible, reckless lending, orders of magnitude greater in China than what's happening here in the United States. So we've got all of these factors. But yes, the QE2 did have another effect, and that was to stimulate speculation in commodities. Open interest on various commodities is at all-time highs. So people are betting on a further rise in commodities. Open interest on the U.S. dollar, betting against the U.S. dollar, is also at an all-time high. So as a result of those policies, the Fed certainly did cause the U.S. dollar to sink. It certainly helped commodity prices to rise, along with China. I don't view that as a success, but if one is invested in any of those things, looks like a success to them. It's certainly helped out the pension funds. However, no one's addressed the core problems here. All the Fed has done is move forward perhaps 10 years worth of stock market gains, and they've front-loaded them into a recovery over the last 2 years. Now we're at the state where the stock market's in a bubble, and I think equities are priced for no returns now for the next 10 years. So that'll be another lost decade, just as Japan went through, and the parallels to Japan are really quite striking at this point.
So, Mish, in closing, let me ask you something. Do you foresee any type of major deflationary type event like we saw in 2008 that can derail, forget, the real economy, which hasn't really been recovering, as you said, but that can derail this fake inflation, inflation in the price of commodities in equities, something that would cause a contraction of credit like the Lehman catastrophe?
That's an interesting question. The one thing that Bernanke has done is corporate finances are in much better shape now than they have been for years. And the reason is Bernanke did drive borrowing costs way down, and all these corporations that were priced for zero, and because on the assumption that they would not be able to roll over the debt, have now managed to roll over that debt and go into debt, just holding that cash on the balance sheets of those banks in case this crisis does happen again. So corporations, are in general in better shape. Whether the banks are or not is questionable. They're maybe in a little bit better shape. So, but one doesn't know. I mean, we've got all these pieces in the global economy. I certainly think there's going to be another downturn in credit and the valuation of banks. One never reblows the last bubble. So we're in this midst of the financial crisis. I mean, in terms of reblowing the last bubble, think of the NASDAQ. 10 years later, it's still down 40% of where it was 11 years ago now. The Nikkei is down 75% from where it was 25 years ago. So the effect of the policies are probably more likely to drag out the malaise, to drag everything out, so that instead of having this huge big crash again, we're probably going to drift in and out and in and out of deflation, just like Japan did. In and out of credit contractions like Japan did, in and out of recessions on a more frequent basis. So the Fed has managed to prolong this, and whether or not one sees that as a good thing or not, I happen to think that we would have been better off, to write down the assets of the banks, let the market crash, let the home prices crashes, and in the wake of that, rebuild the economy. But central bankers and politicians never want to take the short-term pain. So the most likely thing, but not necessarily the only thing that's going to happen, is this crisis is going to drag on for another decade. Not good news.
Mish, for people who heard this interview today and want to read more of your stuff, how can they do that? My blog is globaleconomicanalysis.blogspot.com. That's a mouthful for people to remember. The easy way to find me is do a Google search for Mish, M-I-S-H, just the first two characters of my first and last name. Do a Google search for Mish. It'll take you straight to my blog. I'm number one on the Mish search, and so I write about gold, interest rates, the political nanny states, mortgages, housing, investment ideas on my blog every day, 4 times a day actually, nearly 7 days a week. So check it out. Do a Google search for Mish. Awesome. Thank you so much for joining us.
You're welcome. Pleasure to be on the show. Hope to be back again.